the issue is, it seems that your country is issuing at least an extra trillion in new supply every year, compounding with the maturing existing supply. And I mean, nobody ever asked the question, who's really buying the bonds? Foreign participation in U.S. government bond auctions has been like a shadow of what it used to be, and yet the amounts being auctioned are incredibly more than they ever were. So who's buying it? Well, why don't you ask the Fed and what the $70 billion worth of repos really are all about? How about giving some liquidity to the bond market that doesn't exist anymore?
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. You always ask us to get this returning guest on. Rob Kirby is a proprietary analyst in the gold and silver and financial markets. He's here with us again on Reluctant Preppers to answer some questions about what's going on in the macro economy, the world of finance, and to answer your viewer questions. Rob, as always, thank you for joining us here again on Reluctant Preppers.
Nice to be with you again, Dunnigan.
We've had a lot of strange things happening, from bond repos to bond purchases by the Fed, and on saber rattling that never ends on the trade war with China, and now impeachment talks against, or actions being taken by Congress against Trump that could weaken his position on trade wars and so on. So now we've had some couple of very volatile days on the major stock market indices after an abysmal manufacturing index and employment numbers and so on. So it just seems like we're kind of caught in the whirlwind of the Wizard of Oz here. But could you maybe kind of simple it down for us and tell us what you think to be, what you see as being the most important things that people need to be watching to understand what's really going on?
Well, my thinking has evolved on the repo situation, and I didn't really know what to make of it probably at this point last week, but after doing a deep dive, I can't help but rationalize it in my own mind that the situation in the repo market is a symptom of a much bigger thing that's been at play for a long time. And namely, maybe strangely to some people, I think it's very tied to ever-increasing U.S. crude oil output. And I can explain that if you want me to
please
get into that a little bit.
Yeah, help us see the connection there.
Well, you see, the connection goes like this. Since 2008, America has ramped up its crude oil production dramatically. In 2008, U.S. oil production bottomed at under 4 million barrels a day. And today, America is producing 12.5 million barrels of oil a day. And what has happened in the last 4 years alone, from 2015, American oil production has ramped up by an additional 4 million barrels a day since 2015. And interestingly, if you look at what has occurred in the larger crude oil markets since 2015, we have seen the likes of Russia stop selling crude oil for dollars. We've seen the likes of Iran stop selling crude oil for dollars. We've seen the likes of Venezuela stop selling crude oil for dollars. And, these countries combined make up, let's just say, many millions of barrels of oil priced in other than dollars. These barrels formerly were priced exclusively in dollars, and what this leaves is an overhang of an enormous amount of dollars that don't really have a home, because these dollars were tied up in oil trade. And countries who are purchasers of crude oil from these countries who no longer sell their crude for dollars, there's really no need for them to hold the same level of dollars they formerly were holding all of a sudden, like in a macro sense. So what had to happen was when countries don't need their dollars anymore because their conditions have materially changed, what typically happens is that currency would find its way back to the creator, which would, in this case would be America. And those dollars would go back to America, and to use the cliche, they would start buying anything that isn't nailed down, and maybe even some stuff that is nailed down.
Trying to get real things, yeah.
Yeah, trying to get real, and that causes inflation. But of course, we know that we've been told, and it's been harped and harped and harped on us, that there is no inflation. And of course, there really isn't a lot of observable inflation. And the reason for that, I don't know if you remember the part where I said America's ramped up their crude oil production by 4 million barrels a day in the last 4 years. Well, all these barrels are being produced at a loss. And all the natural gas that's being produced from shale gas and shale oil, all this stuff is being produced at a horrific loss. And it makes you wonder, who produces stuff at a horrific loss indefinitely? I mean, somebody somewhere has an awfully big checkbook to allow these marginal producers, uneconomic producers, to continue spinning their trade. Well, you see, and that's where you got to connect some dots. And you got to wonder who might have a $21 trillion checkbook in the back of their drawer that they can write a big check to continue pricing barrels that are uneconomic to produce. And the reason I would have it, that the reason they're being produced is because America, of course, sells all their oil in dollars. But they have to sell those barrels for dollars, because that way the dollars that are returning home to America, they go into crude oil that's uneconomic, and they basically, it's like taking all the dollars that are returning to America are going into a black hole where they don't create a return, and hence they are not inflationary dollars, because they're going into a hole. They're going into a hole in the ground where effectively oil, I guess you could really say oil is being subsidized in America to produce uneconomic barrels for the simple fact that they're sold in dollars.
That's nothing money laundering.
And they soak the dollars up. You see, the dollars that formerly were going into other countries' crude oil aren't going into that crude anymore. And that sort of creates an oily mess on the floor. And to soak up that oily mess on the floor, you need to create another venue where the dollars, you need to create a sponge to sponge all those dollars up. Well, if you create an extra 4 million barrels of oil a day and price it all in dollars, that acts as a big sponge to soak up an awful lot of dollars that otherwise would be looking for a new way to get spent in America.
We've been told that the official story has been that the lower cost of natural gas and oil is because of the technological advance of hydraulic fracking, and that's what just made these amazing leap.
That's just a complete lie.
Wow.
Because there's current information that tells us of the major fracking natural gas fields. They all have break-even costs of anywhere from $3.06 per million BTU to up to $4.16 per million BTU, with a couple of them sprinkled in the mid $3 US per million BTU. Well, guess what? The price, I know yesterday, I didn't even look today, but the price of natural gas is at $2.33. They're all underwater. Every unit of natural gas that's being produced is being produced at a loss. End of story. Who does that? Who does that?
Well, there's a few cases where things get sold at a loss if you're trying to buy market share to dominate an economy. But in this case, you're the low-cost producer already in the world. There's no need to go below your cost of production if you're already the low-cost producer.
Sorry, who are you saying is the low-cost producer?
It sounds like in the case of North American natural gas, for example.
Well, let's just say that the natural gas that's being produced out of the shale business, none of it's making money. None of it. It's all being produced at a loss. And you know what? And you know what the craziest thing is? That industry's growing.
Yeah, it's a Wild West boom out there. Yeah.
Who or what grows a business in the face of losing money? Like, who expands operations when they're losing money?
Okay, I'll take the bait and say that in areas like the .com boom or Amazon or whatever, you can have companies that are for the promise of future domination of a new market. But this isn't a new market, right?
So this is not a new market.
Right.
And what this done? America is creating so much additional oil currently at a loss, I might add, again. And it's being created, there's so much of it's being created that it has sucked the literal dollar liquidity right out of the market. Because instead of there being an excess of dollars and an inflationary environment, which should happen if markets were behaving the way they should. You see, but the reality is markets aren't behaving the way they should. Just like the Democrats should be up on investigation for criminal activity, for interfering in elections, and instead the world's upside down, and Trump is being investigated with impeachment proceedings. It's all upside down. It's all backwards. You know, we're told that there are too few dollars in the world. The reality, not again, there's too many. You know, we're told the dollar's strong. The reality is the dollar's weak. The reason countries are no longer pricing their crude oil in dollars is because the world is experiencing dollar rejection. And when you have dollar rejection, your dollar is not fundamentally strong. Your currency is fundamentally weak. But it's appearing strong because they create localized, or they create artificial scarcity by throwing money into black holes, because they do this, done again, because they know that there's always going to be willing buyers of crude oil or energy. So it's look, this is the same sort of thing, sort of maybe in reverse, that was pulled on the Soviet Union back in the 1980s when they collapsed the Soviet Union. You know, the Soviet Union couldn't feed itself. So the Soviet Union had to raise currency in the Western world, they had to raise dollars. They had to raise dollars so they could feed their people. Because despite having the breadbasket of Europe at their command, as in the Ukraine, you know, the disincentives that communism brought to the marketplace gave people no incentive to produce efficiently or to maximize profits. Because it didn't really matter whether you were the best producer of something or the worst producer of something, you got paid the same. You know, garbage men got paid what doctors got paid. That's the whole slight with communism and socialism. So in any case, the Russians needed hard currency. And they had two things they could sell to the world to raise hard currency. Only two things the rest of the world, the West, would buy. And that was crude oil and gold. And what did we do in the 1980s? You know, I would recommend your listeners Google the name of a piece. It was written by Ed Steer years ago. It's called When Irish Eyes Are Smiling. Google Ed Steer and When Irish Eyes Are Smiling and read the paper. And it's a very interesting paper because it explains how the West engineered the price of crude oil down and the price of gold down during the 1980s, thus depriving the Soviet Union of hard currency. And that, by most learned people, that's actually what led to the collapse of the Soviet Union. we basically ran them out of hard currency, and they couldn't feed themselves. So things had to change there. And now we've got like sort of in a perverse kind of way, we have America now who has a problem with their currency, and they've had to ramp up uneconomic production of crude oil to act as a sponge to soak up all the dollars. And let's just say if they stop producing this uneconomic oil, the dollars will turn up in the U.S. economy because, like I say, dollar rejection is an ongoing thing and it's accelerating. So, this is a problem that's not going away.
Help us make the next connection from the dollar rejection, the mechanism of stopping of uneconomically producing oil so that you can subsidize it, so that you can burn off those excess dollars that need to be mopped up. From that to needing to inject $75 billion a day into the recapitalizing the banking system through these repo actions to prevent credit seize up. That seems to be a shortage of dollars.
Well, I mean, if you want people to believe there's a scarcity of dollars, you're going to create a venue to soak them up. There's no better confirming way that there's a scarcity of dollars than to conduct open market operations, adding. But what you're taking out through the oil, let's just say through the oil conduit, is a lot more than you're adding. But you see, it makes the story believable, and these are the kind of things that go on at very high levels. It reminds me, it has a familiar ring to it because back in the late 90s, during the Mexican financial crisis, Mr. Robert Rubin, in his autobiography, in a book titled In an Uncertain World, Rubin referenced the Mexican financial crisis, and he states that sometimes in Treasury or at Treasury, we make very bad decisions. But very bad decisions or very expensive decisions that aren't good can be more than worth the effort if they can help delay the collapse or the blow up for 6 or 9 months. So, like, what he was doing is he was basically paraphrasing the way crisis management is performed in the Treasury. These guys, their mantra is to live to play another day, okay? Proverbial, if they can buy some time. Doesn't have to be a long time. If they can buy any time at all, that's their game. And there's no doubt in my mind that that's what they're engaged in right now. They're buying time. And they're buying time because they have to. Because the dollar's life is coming to an end as the world's reserve currency. And this is a process that's ongoing, and it's not going to stop. It's going to accelerate. So that's where we're at least through my eyes. That's exactly where we're at now. And this is a situation. And it does, listen, this story doesn't have a happy ending any way you look at it. I mean, if you're completely and utterly cool about it and can see it for what it is, this ends in war. It's the only way this ends. Because these people have committed atrocities as stewards of the world's reserve currency. And they're ongoing. And I don't believe they're informing Trump at all. I think the story that's being sold to Trump is that, look at all this wonderful oil we're producing. We've reduced our dependency on these evil people in the Middle East, and it's great for America. But I don't think he's getting, as they say, the rest of the story. And the rest of the story is it's being done for basically for nefarious reasons. It's being done basically to soak up dollars that are being rejected from elsewhere in the world.
That's the first time I've heard anybody say that the U.S. domestic oil and gas industry is operating at a loss and is being subsidized.
Well, it's
I didn't realize
completely
that.
operating at a loss, and it has been doing so for some time. And this just doesn't make sense. You got to ask yourself, who would do it? Like, who would do that? It's like when we see other macro plays in the world, we see how the bond market's managed, how your country has never had a failed bond auction. We see how the precious metals get manhandled. You know, this is all done. This is all done with illicit money, dark money. And I would have anyone who wants to listen, I'd have them believe it's the Exchange Stabilization Fund at play. And if you're talking about the Exchange Stabilization Fund in my books, then you're talking about the money that's been documented and identified as missing by Catherine Fitz and Dr. Mark Skidmore. And this is a resource that's at the fingertips of the stewards of the world reserve currency, the dollar.
It certainly stands to reason in a perverse way, as you mentioned, that if you have all these global oil producers who are not selling their oil in U.S. dollars anymore, that one way to try to compensate for that is to basically, well, we're going to be the ones that sell oil in U.S. dollars, even if we have to lose money doing it, to keep the dollar in play.
Well, and I mean, going back to your earlier query, when you say they're putting all this money in play through the repo market, the other issue is foreigners aren't participating in U.S. government bond auctions. So, you've got a lot of U.S. dealers with a lot of inventory on their books, and nobody wants it because that's all part of the dollar rejection scheme too. So the dealers need the liquidity. Otherwise, they've got assets just stale on their books that they can't move. Because, the issue is, it seems that your country is issuing at least an extra trillion in new supply every year, compounding with the maturing existing supply. And I mean, nobody ever asked the question, who's really buying the bonds? Foreign participation in U.S. government bond auctions has been like a shadow of what it used to be, and yet the amounts being auctioned are incredibly more than they ever were. So who's buying it? Well, why don't you ask the Fed and what the $70 billion worth of repos really are all about? How about giving some liquidity to the bond market that doesn't exist anymore? But it's not that there's a shortage of dollars. It's not about a shortage of dollars. It's called the inertia of illiquidity in the bond market. To me, that's the way I see it. And they've got a huge problem with the overhang of dollars, and that's why oil production's been ramped up to basically tie all those dollars up in transaction demand for oil. Makes sense completely to me.
What about you haven't mentioned is the Trump impeachment actions on the part of the U.S. House of Representatives. Do you see any macro implications of that going forward as far as his ability to negotiate effectively in the trade disputes with China, or anything else coming from that other than just a sideshow?
I haven't believed for months now that there's ever going to be a trade deal with China. So nothing's changed there as far as I'm concerned. To me, the Democrats are frankly, they're lunatics, and lunatics rule the day. But I mean, listen, we have people in our monetary order done again, and look at the shenanigans they're playing, with global reserve currency. There's without a doubt there's shenanigans going on that are unthinkable, and most people can't even wrap their head around how absurd and how obscene the games that are being played with the world's reserve currency are. But that's all part of why the world is rejecting the dollar. Because the rest of the world knows that things very unnatural are occurring with the American dollar. And they've had enough of it. I can't blame them. And they won't come clean. It's like when Dr. Skidmore and Catherine Fitz, when they tabled their documentation regarding the missing 21 trillion, the what did they do? They introduced new legislation called FASB 56. And they said, well, we don't even have financial books anymore that mean anything. So, and that's when they were asked fundamental questions about how many dollars there are in the world. And the answer they got was basically the middle finger. So what do you expect them to do? You want me to sell all my output for a currency that you won't even come clean on how much of it there is? I mean, really, Dunnigan, what it comes down to, if I'm going to be told that I'm going to sell my national output in a currency where the creators of it won't even be honest about how much of it there is, I don't want to play that game. Like, count me out. That's not my game. And anybody and that's really what I see happening around the world. Of course, we dress it up and we make it sound like anybody who's rejecting the dollar is a terrorist. And think about this just for a minute, if you will. Countries that America has the biggest problems with in the world are countries that are selling their crude oil for other than dollars. Russia, Iran, Venezuela. Before that, it was Iraq, because old Saddam Hussein, he was selling his crude oil for euros. He was the original.
Libya, yeah.
Okay, Gaddafi as well. Mm-hmm. So why is it really a coincidence that countries that sell their crude oil for other than dollars? I wonder what would happen if Canada tried to sell some oil for other than dollars. We'd become public enemy number one.
No, the U.S. would just start cranking out maple syrup like you wouldn't believe.
Well, maybe they would, or maybe they'd send 2 airplanes to take over Canada. But then again, they'd be talking about Canada being a terrorist threat.
Yeah, that's true.
Well, and you know what? Here's the crazy thing: Canada should be a bigger terrorist threat than Iran, because even though our military is laughed at around the world for the most part in terms of its ability or its capability, just remember that Canada spends about $3.5 billion more a year on national defense than Iran. Okay, so Iran spends around $18 billion a year on national defense. Canada spends 21.5. And but Iran is, for whatever reason, Iran is a much bigger threat than Canada. So go figure. But we'd really see how much of a threat Canada was if we started selling a couple million barrels of oil a day in euros or in Chinese currency, wouldn't we?
So this slush fund of dollars has been used to create artificial demand for the U.S.
It's been
debt.
It's been used for a host of things. It's, Catherine Austin Fitts, she argues that a lot of it's gone off world or into the space program. And it may very well have. I'm not arguing that for a minute. But $21 trillion still buys a lot of love. And you know what? And the real amount might be double that. So all we know is that there's an awful lot of money unaccounted for, a ridiculous amount of money unaccounted for, and all these wondrous things occur in our capital markets that can only have cost like macro amounts of money, and we have nobody putting their hand up saying where it came from. Okay, so anyway, get with the program.
If we could turn our attention to some viewers' questions that have been submitted, that would be awesome. Jay Barron asks, are we in a technical recession, also known as 2 periods of slower growth?
Well, I don't believe we've ever exited a recession. We were lied to about what inflation really is. Go read the work of John Williams at shadowstats.com. So we're lied to about inflation, and if you're lied to about inflation and real interest rates are actually negative, which I suspect they have been for the last 10 years, we're basically, operating in a low or no growth environment, and have been for a very long time. We have warm pockets in the economy that do well, like in high tech, has done pretty well, and the defense industry never seems to do bad because the defense budget seems to go up more than 0% every year.
Oh yeah, any company that's in
Inflation.
the Fed gravy train, you bet. Mm-hmm.
So but in the real world, at least to me, in the real world, food gets more expensive every year. If you need to go out and purchase any kind of medical services, they seem to go up every year. Car insurance never goes down. Rents never go down. And of course, and when they feed us the line on inflation, they always like to say X food and energy. Well, so if I don't eat and if I don't stay warm in winter, and if I don't go to the doctor, and frankly, I've needed the doctor in the last year myself. But I mean, if you don't do any of those things,
or send your kids to college,
right?
Yeah.
There's no inflation.
Yeah.
So it's sort of like saying if you put on some cement boots and jump into the ocean and go to the bottom, there's no inflation for you down there either, except you're dead. Swimming with the fishes.
We've got a question from Ray H. talking about where can you hide? Should we have money in the bank, stock market, mutual funds, etc. at this time? ?
I still like physical precious metal, and frankly, they're still subject to beatings at will from the likes of the COMEX and the LBMA, but the only reason that happens is because American regulators don't regulate. And if we had regulation, the price of metals would, in my view, would take off like a rocket. And at some point that will happen, because at some point I believe regulation will be forced back upon us, because reality will set in that the stuff really is finite and scarce. And you can't be pricing it with endless amounts of paper. The only problem is when that occurs, I don't think there's going to be any for sale. So you got to own it before it happens.
Got a related question here from George West. It says when he hears the term precious metals manipulation, he always feels like he's being the intended target of manipulation by that term. He says evidence of spoofing, which can rig market up as much as down, gets magically transformed to support the, quote, cartel theory that banks and governments are down-rigging metals to protect fiat. So talk to us about why George should have more confidence than he does that this precious metals manipulation is in the downward direction.
Well, the reason we know that is because the commercials never lose. The commercials are always short, and they are never forced to cover. They've never ever once been forced to cover. So, if you drop a plate and it falls up every time, are you going to say that gravity doesn't work anymore? No, you're not. You're going to say there's something really wrong there because it's the opposite to what should happen. And it just so happens that the changes in margin requirements that they put on the paper metals markets at varying times, they always work to the disfavor of the longs, never to the shorts. And the shorts never lose. You see, the longs are forced into positions where they have to liquidate. The shorts are never forced to liquidate. Never yet. Hasn't happened. So if you believe that, we can go month after month and quarter after quarter for 15 or 20 years, and there's never, ever a forced liquidation of the commercial shorts, and there's only liquidations of the commercial longs, you are witnessing a serial crime. End of story. Serious financial crime. And that's what's been going on. And then you got to ask yourself, and who, by the way, would have the heft, the motive, and the financial ability to do something?
Means,
like
motive,
that?
and opportunity, right?
You got it.
Okay. Alan Jester has a question. What happens in times of deflation? Does deflation come before hyperinflation? How does gold and silver perform? How should we use precious metals to protect ourselves?
Well, it's generally said that gold actually performs best in deflation because when things are falling to zero, or when prices you see, things like homes are bought with leverage, typically. Okay, most people who buy a house, they have a mortgage, and when they tighten credit and when the economy collapses, people can't make their mortgage payments, and they end up losing their homes. The bank takes possession of them, and then they basically go looking for a bid to hit at any price to recoup whatever they can get back from the default on the mortgage. Well, gold, like countries that own gold, people that own gold, like most people don't buy gold on credit. It's bought with cash, and it has no counterparty risk. So you don't have to worry when you own gold, and when you own gold coins or silver coins, you don't have to worry about a third party defaulting. It's yours, you own it, and you possess it. And as long as, it's not stolen from you or taken from you, it's yours to do as you see fit. And in deflations, they say that historically, precious metal performs better than any other asset in a deflation. So that's history. Go read about it.
When you talked about banks changing the lending requirements and foreclosing on loans and things like that, it reminds me of brokerages changing the margin requirements and basically foreclosing on when people are borrowed and they own stocks or that kind of thing on margin, and then they change the margin requirements on you, or the value drops somewhat on the underlying. You can find yourself having forced to liquidate when you maybe didn't want to.
And that's what happened. You see, and that was the point I was making with the commercial shorts. They're never forced to liquidate. It's only the longs that are ever put in a position where they're forced to liquidate.
Slick Willie asks, Rob, would you say gold is a savings plan or an investment? Would you buy it to preserve your wealth or for capital gains under present circumstances?
I mean, it could be both, but primarily to me it's insurance. Mm-hmm. If everything in your financial portfolio combusts, very likely gold will perform the best it could. So, and that's why you really want to own it, and you should have some, at least some.
This next one comes up all the time from people who say, I can't eat gold, it has no use.
You can't eat fiat money either.
Yeah, that's right, you can't eat dollars either. Is it true that gold has no practical value except shallow?
Sir, I just want to tell you one little thing about fiat money. I live in Canada, and we have plastic money in Canada. And, I can't take a fistful of Canadian dollars and go anywhere in Europe, probably, and get them exchanged. I probably have to do it here before I go. And nobody anywhere in Europe is going to take a Canadian dollar. I can take a gold Canadian maple, and I can go anywhere in the world and get local currency on the barrel cash for my gold maple anytime. And the same thing I could say about a gold eagle. So, all this crap about you can't eat gold and you can't eat silver. As a matter of fact, you actually can, believe it or not. And it
colloidal silver medicine, yeah.
Colloidal silver is a medicine, for God's sakes. And monatomic gold or colloidal gold is also medicinal. So the reality is gold and silver are closer to eatable than fiat money. So let's dispel with that crap, because it's garbage, and it's a loser's argument.
Until someone can point out a medicinal use for
recipe for fiat money.
Okay.
No one.
Pankaj Patel says, Rob, what do you make of J.P. Morgan caught in the act of silver rigging? Do you think it will have an effect on the price of silver, and what do you see the future gold to silver price ratio? Those two completely separate questions.
Well, listen, what J.P. Morgan has been caught doing and is admitted doing and is accused of doing is like the foreword of a 3,000-page book. So, the real story is that J.P. Morgan is the agent for the U.S. Treasury, and they are the actual muscle in the marketplace that implements U.S. government money policy. Okay. And that's all done when the Treasury or the ESF passes orders through the New York Federal Reserve Trading Desk and then those orders then get disseminated into the marketplace of the commercial banks like J.P. Morgan. So, by giving us a little tip of the iceberg here, saying that yeah, they spoofed, yeah, they did some untoward things, it's not even getting close to the mothership and what the real angle is of J.P. Morgan in the precious metals markets.
Fred Flintstone asks, if the Fed buys the whole market with money from fresh air QE, then who or what owns the USA?
That's a very good question. And it's my belief, I don't believe America owns any gold, or any gold that would be present in sovereign vaults, whether it's Fort Knox or the Denver Mint or West Point or at the Federal Reserve. If there is any real gold present in any of those places, my question is how many beneficial owners does it really have? And the other question I would ask is it really gold, or is it tungsten bars coated with gold? So I don't really believe America has sovereign gold. Certainly not 8,000 metric tons they claim to have.
Jobby Bob asks, what are the odds for the people that have destroyed the current financial system continuing after the reset?
Well, I mean, if you're Jim Rickards, you'd say give them a do-over and allow them to bring in their SDRs and let them have a complete blank slate and try it again. And my attitude is hang them from the lampposts. So I differ with, I guess different people have differing opinions. I think the people that have been in control have done such a poor job, they don't deserve another chance. And they're criminals. So that's my view of it.
Kelly Hamilton says, when I try to tell my son to get his money out of the bank and buy metals, he asks me why. He hears the repo market is dealing with hedge funds, IRAs, etc., and it doesn't affect him or his checking account. Can you explain the effects, if any, on the common little guy on the street with paychecks going into and being held in a checking account at a credit union? Thank you and God bless.
Okay, well, the answer to that, as far as I'm concerned, is buy them now because you still can. Because I truly believe we're all going to live to see a time when you can't buy them for money, not for fiat money. So, planning ahead. It's called planning ahead. You're not going to be able to make a snowman in the middle of summer, and you're not going to be able to buy precious metal when fiat money fails. So buy it now while you can. You won't be making snowmen in the middle of August anywhere in the lower 48.
Pete Gerard says, how does Rob see emerging markets faring, especially those in Southeast Asia, during and after an upcoming crisis as compared to Western economies, given that it could be argued that the banks in the West have been more reckless with QE since the 2008 crisis compared to the market correction? Go ahead.
Absolutely. Well, the rest of the world, as in the BRICS countries, they have been building and preparing a financial infrastructure for a day when the dollar is no longer the world's reserve currency. So based on that alone, they should fare better if the rug's pulled out on the dollar as the world's reserve currency, and if dollars become worthless, it's going to affect Russia, China, India relatively less than it's going to affect Britain, Canada, the US, Mexico, very likely, and everywhere else in Western Europe.
Jeffrey Daly asks a question that I think might be on a lot of people's mind. It's interesting, if you look at the demographics of our viewing audience, it's heavily weighted towards those that are in later career stages and are concerned about sort of preserving their family's financial well-being. They're thinking generationally and so on. Jeffrey Daly says, I am a U.S. service member with over 18 years of retirement savings tied up in the Government Thrift Savings Plan, TSP. At present, my money is in the G Fund, a low-volatility, virtually risk-free U.S. bond fund. That's quotes. According to the fund description on their website, to me, the other funds appear to be a lot more risky given the lofty valuation of the stock market. I'm told by the administrators of the TSP that I cannot pull my money out till I separate from the service, and I can only reallocate my funds within the TSP. I have 2 years left before I qualify for a military pension. What would be your advice to U.S. military service members in this precarious situation? And I think that question goes not just to military service members, but anybody who's in a career job where they're employer has like a 401k plan that says you can't touch those funds unless you separate from service to that company.
Well, if you can't touch it, you can't touch it. So I really don't know what to advise you. I mean, rules are rules, and if retirement plan administrators have hard and fast rules that you can't take it out and you can't move it, I mean, I don't really know what to advise you to do, other than to try to the best of your ability to have some savings outside the plan. And as much as you can afford to do that. But it's a tough predicament, and I'll tell you, I think an awful lot of people, not just in America, but an awful lot of people in Canada too, are going to be caught in a precarious position if, as and when we get some kind of currency reset and they've got their money all tied up in stuff that has very high exposure to U.S. government debt. Mm-hmm. I mean, historically, in the mainstream financial parlance, it's assumed and preached that U.S. government debt or fixed income is safety. I honestly believe there's going to come a day when the worst performing assets on the planet are going to be fixed income. So, anyway, that's what I think.
Yeah, I think the crux, when I get down to the bottom of his question, I think the thing he's really aiming at there is he's trying to weigh, should he hang on for 2 more years to qualify for a pension versus cut and run with and get his hands on the funds that he's got in this voluntary savings plan he's been contributing to all along.
Well, there'd be a host of concerns you'd need to look at. Like, you can't just give a cookie cutter answer to that.
Absolutely.
I don't know what the penalties would be if he were to take it out early.
Right.
I don't know his financial situation, and it's like, it would be irresponsible for me to go off half-cocked,
No, but identifying the principles that he needs to weigh, that he needs to think about.
I think it's different from person to person. And, because you've got to weigh personal circumstances it's an individual decision, and it's also got to do with people's risk appetites. Like, some people are nervous Nellies if they spend $5 at the horse races, and other people are a little more freewheeling. Some people are in a position because of in other areas of their life where they've maybe been very prudent, like where $5 doesn't hurt them, or a small amount doesn't hurt them as much relative to the next guy. So without really knowing somebody's situation, whether they have dependents, whether they own or rent their house, what their health situation is. Mm-hmm. There's so many factors that you need to consider. I just don't believe there's a cookie cutter answer for that.
Well, I think in what you just talked through, you came up with about 8 or 9 different factors that a person needs to weigh and think about. So that was helpful.
Yep.
Normal Norm 777 says, Rob, could you please give a basic and then a slightly more complicated example of a derivative contract that would be executed these days and why these will cause the next financial collapse? Please remember, many people have heard the word derivative but have little finance background. So okay. Why is derivatives increased risk for us these days?
Well, I mean, a COMEX futures contract is supposed to represent, in the case of silver, one futures contract is supposed to represent 5,000 ounces of silver. But the way these contracts are bought and sold, the underlying physical pile of silver available in the world, it's like the Earth produces around 800 million ounces of silver every year. That's what comes out of the Earth's crust in terms of mining. But on a busy day in COMEX, we will see COMEX maybe sell that amount of silver in paper form in one trading session. You see, so that is silver that isn't available to deliver to anyone anywhere, because there is no cache of 800 million ounces of silver anywhere in the world. Okay, it comes out of the Earth's crust at about 800 million ounces a year, but most of that is spoken for. So the difference, and the thing to point out is the leverage that people have when they sell derivatives. You know, because derivatives are it doesn't matter what the market is. A derivative always stands for an underlying thing. So, like, you know, whether it's a bond future or a silver future, they typically employ leverage. Almost always they employ leverage, and you can sell them in vast amounts, you know, that dwarf the underlying supply, and it doesn't really matter whether it exists or not. But it allows well-heeled market participants to basically inflict their will in a given space, because they can effectively artificially price something utilizing leverage. I mean, it's the principle that's involved is if I want to, because derivatives trades typically can be characterized as bets, and so if I'm making a bet with you, like I could be at a poker table with you, and if I'm your banker, and if I know how much money you have, and if I want to win a bet with you, so, you know, you might have a winning hand. You might have the best hand. Like you might own some gold, and you might believe, and it might be true, that gold is fundamentally, physical gold is very dear and the price should be going up. But I can say to you, like, you know, you're betting for the price to go up, and I'm betting for it to go down. And I know that you only have $30 in your wallet and to your name. So, you know, I can just say, I'll bet you $50, all or none, that the price is going down. And then you have to fold. You see, because I know that all you have is $30, and it's, you know, and I'm making an all or nothing bet. So I just bet more than your resources to respond. And this is the kind of thing that we were talking about earlier in the interview. This is like the commercial shorts always win. Their bets that the market's going to go down always pay. And the people that are long, you know, the commercials have been long on extremely rare situations, and that's when the price has gone up a few times. But I mean, they don't lose. That's the thing. It's like when you're playing at a poker table with a marked deck. The dealer always wins. The house wins every time, and that's how we know that it's rigged, and that's how you know it's criminal, because one side wins every time, and in a random distribution of a free and fair market, one side doesn't win every time. That's not the way things occur in nature.
You're taking me back to our homeschooling days, where my son wrote a report in junior high called "Why Vegas Always Wins." He had educated himself on the odds of the various games and stuff, and laid out why it was a scam.
Yeah, well, you know, what happens in Vegas stays in Vegas.
But what happens in the capital markets affects everybody. Yeah. Hey, we've been speaking with Rob Kirby, proprietary analyst and founder of KirbyAnalytics.com. Rob, before we let you go, can you stick around for another bonus question for our Patreon subscribers?
Sure thing.
For those of you who are not yet subscribers, you can join the club now by coming on over to patreon.com/ReluctantPreppers, and for any amount of monthly donation, you will be on the inside of this and get bonus content from Rob and other guests. So come on over there. Well, thanks for joining us. As always, always appreciated by our guests. We weren't able to get through half the questions we had, but you've been very generous with your time. Thanks for joining us on Reluctant Preppers.
Been my pleasure.
Hey, Reluctant Preppers, if you want to hear more of bonus footage from other guests we've had on, come on over right now to patreon.com/ReluctantPreppers and access that bonus footage there. Take care.
It seems so hard to order. Who can I trust, and how do I even start?
Oh, you just go to sdbullion.com/RP, pick out whatever gold or silver you want, add it to your cart, you can check out, and it's on its way. And they're A+ rated by the Better Business Bureau.
Wow, it's that easy?
Your first ounce of silver is at spot price and you get free shipping on any order over $99 at sdbullion.com/RP.
After I order gold or silver, how can I trust I'm going to get it? And I don't want everybody to know that I'm ordering gold and silver.
Oh, it's okay. It's fully insured. It's trackable, and you have to sign for it, so nobody else is going to get it but you. And it comes discreetly packaged. If you order a small amount, like maybe gold, it'll probably come in a box that looks something like this. Okay. And if you order a large amount, maybe like silver, it'll come in a box that looks something like this.
Wow.
But it doesn't say gold or silver on there. It might say something industrial or something else like that, but nobody's going to know what you ordered.
Oh, that's great to know.
Your first ounce of silver is at spot price and you get free shipping on any order over $99 at sdbullion.com/RP.
If I own gold or silver, how will I ever be able to spend it?
Oh, sure. Well, consider good times or bad times. Like in good times, you can sell it back to the same place you bought it from. sdbullion.com/RP will buy it back at the best price guaranteed on the internet. You can take it to a local coin shop and get cash in your hand, completely anonymous. Some people you know may be willing to take gold or silver coins in exchange for goods or services. Now, in bad times, when things have really fallen apart, time after time in history, people have found that in hard times, gold and silver really does come through as something that people recognize as value even after everything else has failed.
Your first ounce of silver is at spot price and you get free shipping on any order over $99 at sdbullion.com/RP.
What if gold or silver drop in price after I order it?
Well, everything fluctuates with time, but nothing has held up longer and better than gold and silver throughout all the changes that have happened in history.
Your first ounce of silver is at spot price and you get free shipping on any order over $99 at sdbullion.com/RP.
What good does gold do me anyway? I can't use it for anything.
Well, I think I found a form you might appreciate.
Wow. That's beautiful. Wow, I can wear that just about anywhere.
And you can take it with you through airport security and across borders. It's small and compact and lightweight, and you can even hand it down through generations.
Your first ounce of silver is at spot price and you get free shipping on any order over $99 at sdbullion.com/RP.